Hello, everyone. Welcome to the Asia PEVC Summit 2020. And this is the first dedicated panel on the Vietnam private equity market. So I'm Ngoc Nguyen, the Vietnam-based senior correspondent for DealStreetAsia. And joining us today are Andy Ho from VinaCapital. He's the managing director and chief investment officer at VinaCapital. And Chris Freund, partner at Mekong Capital, which is this is a slight change from the previous replacing Chad Oval, also partner at Mekong Capital, because Chad couldn't join us today. And also we have Niraan de Silva, managing director at an executive board member at VN Life, which is the parent firm of Vietnam's largest e-payment company, VN Pay. And the Google thematic report has just recently identified VN Life and VN Pay as the second unicorn in the Vietnam market. So welcome, and thanks to you all for participating in today's panel.
Thank you.
All right. So to start with the panel today, so recently we conducted a GP survey, and everyone picked Vietnam as the most attractive market for investor during and post the COVID-19 pandemic. But we also have to look at some data. So our own data show that in 2019, there were nearly 20 PE deals recorded into the Vietnamese market, including big ticket size, such as the investment in VN Life. But coming to 2020, there were around only 9 to 10 deals in the market. And if we exclude the 650 million investment into Vin Homes, then the transaction value during this year accounted for less than a quarter of the last year value. So I want to put the first question to Andy. Do you think that the slowdown in terms of the investment value attributable just to the challenges in doing due diligence because of the travel restriction, or has the pandemic exposed something about the Vietnam market?
Hi, good afternoon. Thanks for that. Well, I think what we're seeing at the moment is we are seeing a lot of deal opportunities on our side. I think the travel restriction has made it very difficult for regional investors and global investors to participate in Vietnam at the moment. There are folks that have people on the ground and they are doing a review of companies and opportunities. But by and large, we are seeing opportunities. We've seen a lot. Our pipeline is quite large, and we've closed a couple of deals this year already, and we're poised to close a couple more before the end of the year, knock on wood. But I think what's happened is because the travel restriction has made it more difficult for others to participate in Vietnam, more so than anything else. The opportunities are here. Granted, there are some opportunities that are very distress-based types of assets, and if you're going to invest in distressed asset-based assets, you're going to have to be very experienced, being on the ground and understanding what the issues are to resolve. And to be honest, that's where the good opportunities tend to lie. Is if we're willing to take on some distress, whether it's capital structure or product issues or human resources or corporate governance issues. I think that's where the value will be created once you resolve some of these distress issues, and the business can grow in a smooth manner in the coming years.
And in terms of the distressed investment opportunities, which are the sectors that you are seeing, the transaction, the deal flows yielding from?
Yeah, we're seeing deals across all sectors, from consumers to education to healthcare to materials. We're seeing all kinds of deals. Banks, lots of banks. Banks need to raise capital in the coming years. Although there's a lot of liquidity in the banks, so they are still raising capital. So I think there is no specific sector that we're seeing more or less of. I think in general we're seeing opportunities in all the basic sectors that contribute to the domestic economy. We're also seeing a lot of technology startup businesses seeking capital, but I think their issue is they're burning a lot more cash than planned, and they're going back to the market to look for capital a lot sooner than planned. But that's not really where we focus, and so maybe Niraan can touch upon that. Yeah. But by and large, most of the private stuff and public equity, for that matter, are in the general sectors that contribute to the domestic or benefit from the growth of the domestic economy.
Mm-hmm. Yes, and over to Chris. So Mekong Capital is not investing in the distressed assets. So you've been focusing on the consumer theme in Vietnam. But if we look at the deal flow, the data, then what has caused this slowdown? And is it just because like there is a lack of real opportunities for local funds?
I think the opportunities are as good as ever. So when we go out and meet pipeline companies, it's as good or maybe the best it's been. I think in general, there's more and more entrepreneurial activity in Vietnam, more young people willing to go start up new businesses. And as some of those mature, they become investment candidates for funds like us. So I think that the general trend has been positive. Clearly there was a slowdown in 2020. Part of it was, I think, because a lot of funds that are not based in Vietnam had trouble coming here and conducting due diligence. And I'm quite sure that slowed down a lot of deal activity, except for investors that do have a strong footprint here in Vietnam. We too had been working on many deals in 2020 and have not yet completed our first investment in 2020. But that was more, I think, due to us focusing on some long shots in our pipeline that we later realized we were not really prioritizing the low-hanging fruit. And so we kind of refocused on what we believe to be the most attractive types of investments that are a very, very close fit with our criteria. So those are what we're working on now, and hope to get a few of those completed in the next few months.
So do you think that given the travel restriction, then this is a good opportunity for local fund like yours to actively deploy capital, Chris?
Mm-hmm. Yeah, I think it is. Anytime that we're not in a bubble, it's a good time to deploy capital in Vietnam. And we're not in a bubble right now. So yes, I think it's a very good time, and it's really not very competitive. So it's a good time for any investors here on the ground.
So was there any bubbles in the past?
Well, of course, there's been. I started investing here in the mid-90s, and so in the late 90s there was a bubble. Everybody wanted to rush in and invest in Vietnam, and then everybody lost a lot of money, and then again around 2007, of course, there was a huge bubble, and there was a lot of euphoria and unrealistic expectations, and a lot of money was lost in 2007. And the market lost 80% of its value, and then gradually climbed back. I thought about a year and a half ago that a bubble was forming, but it didn't. And actually now the valuations are quite reasonable in Vietnam. So it all seems quite fair relative to the growth rates.
Mm-hmm. So has that valuation been fair just because of COVID-19, or it has been set for quite some time?
Vietnam, I mean, if you look at we don't invest in public equities, but if you look at the public equity market, like the PE ratios, I mean, this has normally been a very reasonably priced market with, PE ratios of say 10 to 15 normally, for a medium to large size, fast growing company that's growing say 30% a year, they're having PE ratios of 10 to 15. That's quite reasonable. It doesn't seem to be overvalued. And I think it's similar on the private equity side. I mean, we don't always agree on the valuation. So I'd say around 1/3 of the deals that we work on, we have to walk away because we cannot agree on the valuation. But around 2/3 of the time, we are able to agree on a fair deal and then move ahead.
Mm-hmm. And one question for Andy, as Chris has mentioned, the correlation with the public market, and VinaCapital also invests across both public and private equities. Then how do you see the performance of PE assets in correlation with the public market? And here by performance, I mean also the valuation and also the return that you observe throughout the years?
Yeah, I think we all want to use the valuation in the public equity market to benchmark the valuations of private investment. But the reality is there's very little correlations. If you look at the performance, EPS growth, for example, the general market has a negative EPS growth 2020 over 2019. It's about -5 to -10%. When you look at the private equity portfolio, you can see EPS growth from 10 to 20%. And you look at more specific companies on the listed equity side, if you choose the companies correctly, you can actually see your portfolio grow between 10 to 15% in EPS. So the fact that you have a market that's contracting in terms of EPS doesn't mean the opportunities aren't there. And as a result, it's hard to take the whole entire public equity market and benchmark it on the private side. But people tend to do that. But I try to tell them, okay, that's not very important. When it comes to private investment, what's important is minority protections, corporate governance changes, commitments to grow the business, changes in ESG. We put a lot of effort and time into ESG and getting management to commit it to that. And so if the business grows, the valuation will grow and the multiples will expand. So, and we tend to look at private businesses to grow a lot faster than public businesses. So from all those perspectives, it's fairly difficult to say the private side is highly correlated with public side. It's not, and there are different reasons. Liquidity is not as good relative to the public equity market, so you have to take that into consideration as well. And then again, when you do exit a private investments, you can move a controlling block, whereas in the public equity, you may not be able to move a controlling block, and as a result, it's harder to do trade sales. So there are many elements that are completely different, and as a result, the correlation would be very low.
Mm-hmm. Yes. So in terms of adding value to the PE portfolio, questions to Chris. So there is the COVID-19 pandemic. So what are the user metrics that you use to drive the performance of the portfolio, and have they changed pre and post COVID-19?
Our metrics are constantly changing, but it's not really specific to COVID-19 because both within Mekong Capital and with our investee companies, we start with a clear vision of the future, like a shared commitment for, you could say, a goal or a clear picture of what the future looks like and what the companies are committed to. And then kind of working backwards, looking at what are the best, like the optimal pathway and what's the most direct path to achieving that vision for the future and how best to measure that. And whenever we think we've cracked it, we always realize 3 months later there's a better way. And that's been going on for a very long time. So we came to discover that you never really have the final answer about the best metrics. It's constantly needs to be optimized and refined. So yes, we're constantly reevaluating, what's the best thing to track. And of course, yeah, COVID introduced a new challenge, especially for, there was a lack of tourists. So any companies in Vietnam that depended on revenue from tourists, they lost that. But then they also tended to adjust to that in good ways. Like restaurants now have really refocused on local Vietnamese consumers, which are much better than tourists, frankly, because they come in larger groups and they're repeat customers. So they have a much higher lifetime customer value than tourists did anyway. And now, so like restaurant groups, for example, may have developed new KPIs about what kinds of Vietnamese consumers that they're targeting.
Mm-hmm. But are there any strategies or approaches that you used before but are not applicable during this time?
Yeah, we're always throwing things out. We have to keep looking for what we thought we knew in the past, and then that's not really leading to breakthroughs in performance, and then throwing that away and newly inquiring into what really works. I mean, the most recent one for me was always a conundrum about bonus systems. We always, in so many areas of companies' operations, were able to really get things working very well. But on bonus systems, it was more inconsistent. And we thought we knew some insights about bonus system design, like keep it simple, for example, easy to calculate, pay it out frequently. We thought that was the way forward, and we realized we were missing a bigger picture about employee engagement and why people really come to work and what really motivates them. And bonus has a role to play, but it's not the whole picture. So that's kind of an example where we threw something out and kind of started over to ask, what really drives employee engagement at these companies, and how can we maximize that? So that's something we've been inquiring right now, and discovering some patterns from our past portfolio companies.
Mm-hmm. Okay, let's talk a bit about the sectors of focus. The technology sector has attracted a lot of investment, even big ticket size from the PE investors, but some are also really selective and stay cautious about investing into technology. So Niraan, at VNPay and VN Life, you've got like marquee investor as a GIC from Singapore, and then SoftBank Business Funds as your shareholders. But from your view, given that dynamics, do you think that technology in Vietnam has really caught the eyes of PE investor, or a really an opportunity that cannot be missed, or it's just like a play to diversify their portfolio?
Sure. So I think a few things. I think firstly, technology is quite a widely used term. And actually every business, whether they be pure technology or traditional offline, uses some element of technology. So, I would say that pure technology as an asset class, a standalone tech business like ourselves, having spoken to a lot of PE guys and VC investors that want to invest in us, it's very clear to us right now, post-COVID, their investment appetite is very different, meaning they are very focused on business model, right? They are very focused on unit economics. They are very focused on getting to profitability faster. Vietnam is not a China or an India, right? So sustainability of model is very important. The other thing that I think is holding people back right now on the technology front is they are waiting to see how business models evolve. I think post-COVID, you're going to see a lot of change in terms of digital adoption, whether it be merchant enablement or direct to the consumer. And right now, we're still very early in that change. So I think there's very much a wait and see on the tech side, what technologies will be adopted, and also what technologies will scale. I think that this is underestimated in Vietnam. There's a lot of great technology in Vietnam, but to take technology and scale it nationwide and to achieve critical mass is not an easy thing to do. So I would say, in summary, technology is obviously a very important asset class, but you can take a traditional asset and enable it with technology to get to a omni-channel outcome, right? And I would say the future right now is not necessarily pure technology, but for these kind of high growth, cash burning businesses, they have to look at partnering up with traditional business that have the scale to be able to really attract huge amounts of capital. I think that's my view on that.
So
if I may, I think the way we look at it is different. Technology is simply a sector, but there is the maturity of the companies.
Yeah.
We have a venture fund, we have private equity fund, we have public equity fund. All these funds participate in the technology space, but the venture fund participates in companies that are less mature, no profits, no EBITDA, maybe revenue, maybe pre-revenue. Whereas the private side will look at companies that have profit already in the technology space.
Yeah.
Whereas the listed, like FPT, it's a massive company. It is technology as well. And
Sure.
it makes a lot of profit. It makes a lot of money.
Yeah.
Right? So technology is all over in terms of
Yeah.
value.
I think adding to Andy's question, actually that's a very good differentiation about the scale of the investment, VC or a mature stage tech company that's invested by PE. Going back to your first question, now, what's holding technology investors back, right? Especially at the smaller end of town. Actually, I don't think it's the travel or the travel ban. It's the wait and see, because honestly, I think those that disrupted pre-COVID are probably going to get disrupted post-COVID as well. So I think honestly, people are waiting to see, and it's a very much a wait and see approach. It's not that they don't believe in that smaller end of the ecosystem.
And just to inform our attendees, our participants in the event, that we will have another section on Vietnam that we discuss, that we dive into the VC space in the country. So we will have a lot of information on the tech space tomorrow. But speaking of PE in technology, then in financial services is really hot sector. But in Vietnam, their payment has taken the majority of digital financial services startups. And in payment alone, there have been like about 3 major companies. Niraan, so do you think that there is still room for more players to emerge and room for more PE investor involved?
Look, payments as a vertical within financial services is a tough one to scale. Let me put it that way, right? So do I believe there are going to be a lot of startups that develop great payment technologies? Yes, I do. Do I believe they'll be able to scale outside of the current larger players? I don't think so. Where I see the real value created are ancillary services through that payment journey, whether it be advanced data analytics or AI, whether it be lending across that payments journey, whether it be micro insurance. There are many other add-ons to digital payment. So look, do I see any disruptions right now to the larger digital payment players? No. It's a very long-term capital-intensive game to get to scale. But I do see a lot of great startups, technology companies that are building, the ecosystem around payments.
Yes. And back to Andy. So the pandemic has resulted in the healthcare as a sector to watch out for. And you also mentioned earlier the distressed asset investment. So did you think now is the time to invest in the healthcare assets such as hospitals and clinics?
Yeah, I think our belief in healthcare is it's not about now. Our belief in healthcare is we've always liked healthcare. We've invested in the largest pharmaceutical company, from Domesco to Nguyen, which are the #1, #2 pharmaceutical companies sold to Japanese and South American folks. To hospital, we invested in Huang Mi Hospital in 2009, 2010. So our view of healthcare has been a long-term view. It is not now or it's not before. It's just that as time goes by, things change in healthcare. Technology changed in healthcare. The way healthcare is delivered to people are beginning to change. The healthcare insurance changed completely in Vietnam over the last couple of years. So you have to deal with that. And further to that, the biggest challenge in healthcare, when it comes to hospital at least, it's the locations and it's the people. It's at the end of the day, you need doctors and nurses, and you have to mobilize them, and you have to find good locations for the doctors and the clinics, for the hospitals and the clinics to be set up. Those are the challenges with hospitals. And at the same time, we have a lot of regional investors that are interested in hospitals, and they drive up the valuation quite quickly in Vietnam. We are benefiting from this, but it's fairly difficult for me to think through how to value a hospital at 15 to 20 times EBITDA, but that's what's going on right now. And we sort of benefit from that because we have a portfolio that has hospitals. But the reality is, I think that's a bit high at the moment. I think hospitals have to make a profit. People quote themselves in EBITDA because they don't make a profit. Okay, so that's every time someone comes to me and tells me something in EBITDA, it doesn't make a profit, does it? When is it going to make money? And it goes back to the basic question, is that the right business model? Do we have the right business model in place, even for healthcare, which has been around for hundreds and hundreds of years? Some hospitals make a lot of money, you know that in Vietnam. Some hospitals can't break even, right? So the key is how to break through those and filter them out and figure out why some hospitals make a lot of money and some don't. And that's the business model, and that's the challenge that we have as investors to figure out, okay, which one we want to invest in, which one we don't want to invest in.
Yes. Put aside the capital intensive assets like hospitals, and maybe pharmaceutical is also require quite large investments. Then what are the opportunities and challenges for new models or new strategy within healthcare to explore?
Well, right now, we're looking at a few new models. It's unclear whether it'll be a moneymaker or it's just a fad. For example, we're looking at some businesses doing diagnostic. They're centralizing diagnostic, whether it's hair, urine, or blood. They centralize it for other hospitals. You're looking at home deliveries of services. How do you move away from the central system and move to the hospital services and deployment of medicine into people's home? Because what's happened is the population is getting older and older, and some of the patients can't leave their home. And now in particular, as Vietnam's been fortunate to control COVID-19, but when we were unable to control it and everyone was in lockdown, having delivery of health service was key. And delivering of medicine to the home is key. We're also looking at how pharmaceutical products are being distributed, how grocery stores are taking on the pharmaceutical distribution part, how hospitals are taking it on, and how the government rules and regulations are changing so that hospitals and healthcare insurance are paying for pharmaceutical products. Those things are changing very, very fast, and business models have to adapt for that.
Yes. Also, Chris, at Mekong Capital, you invest across quite like a really wide range of sectors, from education to microfinancing, F88, and then the retail, F&B, logistics. Throughout the pandemic, and also the current investment you have made, I think for like 4 or 5 years now, right? So how has the performance been for your firm with or even without COVID-19? Because it's actually COVID-19 is Vietnam managed the pandemic quite well, so it's not as severely impacted as other markets. So please take us through the performance of the portfolio.
Sure. Well, in our recently invested fund, Mekong Enterprise Fund 3, we're just holding 8 investments, and none of them were too negatively impacted by COVID-19. Some retailers like Pharmacity, which is a pharmacy retail chain, or VinaCapital, and demand for their products has been pretty reasonably stable. And then we have a F88, which is a consumer lending business, has been actually grown more than 100% this year. Actually, Pharmacity has grown more than 100% as well. And then, education was hit a bit when the schools had to shut down around March and April. So we have an investment called YOLA, which is English Language Training Centers. So they had around 2 months or so where they couldn't operate. So that wasn't good, but that ended. And then now they're all operating like normal. So everything's back on track. I'd say and then the logistics are doing very well, because actually there's more demand for logistics this year because of the shift to delivery and the shift to modern trade retail. So logistics companies are having a great year. I think the one sector that we've invested in that has a little more challenges would be restaurants. Like, for example, one of our investments is Pizza 4Ps. The revenues are actually up year on year, but that's partly because they opened a few new restaurants. But they did have a certain amount of customers who were tourists, and now that business is gone, so that impacted the revenue. And we have another restaurant group which owns the brand called Wrap and Roll, and it's a similar story there. So they're both happy with their performance this year, but there's a little bit of headwinds because of the lack of tourists, which we think will probably resume itself about 6 months from now. But on average, across our whole portfolio, for 2020, the growth rate has been about 35%. That's been the average in terms of revenue growth and gross profit growth. It's 35% year-on-year growth year to date.
So is that consumer theme in general the factor to help you be resilient? Like, so it's kind of the risk mitigation strategy itself to invest in those consumer themes.
There's an element of that. I mean, we want to invest in simple, proven business models. It's not our forte to try to predict new innovative business models. Rather, we're looking for proven business models where it's all about leadership and excellence in management. And then that's kind of the domain in which we operate. So for example, say pharmacy retail, there's a lot of precedents of large pharmacy retail chains that have been successful around the world. So we saw an opportunity to execute well on a proven business model and just make it the #1 company in Vietnam in that space, which is what Pharmacity has achieved. So we're not taking business model risk. So I think that also helped us avoid maybe some sectors that investors kind of had more difficult times this year. We were able to avoid those, but it's also because we made a lot of mistakes in the past. So, I mean, just like VinaCapital, we go back to the early 2000s from our investment track record, and we've made so many mistakes. So we learned certain traps to avoid,
So continuing with the opportunities and challenges within sectors. So coming to financial services, so in payment, why there seems to be a lot of potential in the sectors, but as Vietnam consumers are quite relatively new to the digital trends, what are the challenges to drive up the payment business in Vietnam, Niraan?
Sure. So I think it's a double-edged sword. I think one is consumer adoption, the other is merchant acceptance. So on the consumer side, I would say not simply because of COVID, but over the last 2 to 2.5 years, the banks have really made a conscious effort from top to bottom to pay special focus and attention to digitizing their reach to consumer, whether it's the mobile banking app, whether it's the iBanking module, whether it's now end-to-end eKYC, right? So the banks are taking that first step to give people the ability to pay via digital means. Now, just to give you some numbers there, 2 years ago, so we support 22 banks with their mobile banking infrastructure, as well as 40 banks with a lot of use cases on their mobile banking app. About 2 years ago, we were at about 2.8 million active users. And just bear in mind, we support the 4 state banks in Vietnam, Vietcom, Viettin, BID, Vinagri. Right now, we are at 11.5 million active users. So the rate of adoption is now growing very fast. So on the consumer side, I think the banks and the alternative payment companies are doing a very good job. On the merchant side, this is a much harder sell, so acceptance. We've spent the last 2 years really educating the merchants right now the benefits of cashless payment. Cheaper, faster, cleaner, right? Because of us, because of other payment companies, merchants now understand the benefits. It will still take time for mass adoption. So I guess my final comment is very early in Vietnam. The competitor is cash. Right now, our job is to convince someone not to choose between digital payment methods. It's actually to choose and replace cash.
Yeah, from our perspective, we invest in a lot of banks. We have about 5 banks in our portfolio. all the banks have a digital strategy, which includes online payment.
Yeah.
Okay? So the key to the whole thing is that the customer acquisition cost has to be low. You can't run this world having to buy your customers all the time. And that's where the banks have a clear advantage, because the banks have an incumbent customer base that is looking for more and more services. So you have the banking stuff, you have the online, and then you have other financial products that the banks will provide. So eventually the banks will do all the stuff that's necessary. And the key is to make it simple and seamless for different types of payments across the system.
Yeah.
Got it. Okay, so so we have 5 minutes left for this panel, and one macroeconomic question for Andy. So Vietnam has been praised for its macroeconomic fundamentals, and so now the country's position in the global supply chains has been boosted, and thanks to the shift from China to other markets. So with regards to the recent U.S. and China relations and a new government for the U.S., to what extent do you think that Vietnam will be a replacement for China?
Well, I think I think it's hard to say Vietnam will replace China. That's completely illogical. If our chief economist basically said, if only 5% of the manufacturing businesses migrated to Vietnam, it would be an increase of 100% in manufacturing in Vietnam, right? So there's really no way Vietnam can replace. Vietnam will be a diversified offering to some of these multinationals. China plus one, a continuing story. It is where they have to diversify and de-risk the supply chain. So we have already saw that happening way before the China-US trade war. The China-US trade war only accelerated a number of businesses that had already chosen Vietnam as the next destination to diversify the supply chain. So that effort, the China-US trade war, only accelerated. And once COVID-19 hit, the disruption of the supply chain that came out of China became clearer and clearer. And again, that accelerated the migration of some of the multinationals manufacturing activities to Vietnam. But what's happening now is we invest in a lot of companies that own industrial processing zone, and they're seeing a slowdown in activities because a lot of these multinationals can't get to Vietnam to sign a new contract. Okay, so the activities of expansion really relates to the business that's already inside the industrial processing zone trying to expand themselves, which is happening at a fairly rapid pace, but we aren't bringing in new manufacturing base yet. The new manufacturing multinationals coming in is being restricted because of travel. So the industrial zones are expanding because of existing customer base for the moment. But having said that, we are seeing a migration to Vietnam, and we think that's one of the key pillars of GDP growth in the coming years for Vietnam. Our view is that this year we'll probably grow GDP around 2 to 2.5%. But next year, hopefully, we'll get back to about 5 to 6% GDP growth, and then the years after that, back to 6 to 7% again. But the GDP growth will have to be more specific in terms of, okay, if you're going to bring in multinationals, we have to have the proper infrastructure. We also have to have labor forces. The labor forces is simply unavailable in certain places, or the cost of labor has gone up quite significantly in certain places. And so those are the key components that the government of Vietnam, or even the government of the province, need to convince multinationals, when you come, we have infrastructure and we have the labor forces to service your needs. So those are the things we're looking at, but for us, we don't really invest a whole lot in the multinationals coming in. We invest in materials like Huafat, the largest steel company. They will sell steels into these manufacturing businesses, or steel into the building of manufacturing, the factories, etc. So those are the focus that we're looking at right now. How do we invest in businesses that will sell into the wave of FDI coming into Vietnam?
We have 1 minute left, and I have one last question for the PE firms here. Given the positive signals for the Vietnam market, did you think that should GPs outside of Vietnam take the risk to do deals in the country during this environment?
We are.
No, I mean GPs outside of country. Do you think that they should still do deals in the country?
Yeah, why not?
Hey, Ngoc, one interesting thing actually on the technology side, to de-risk deals, foreign investors coming in, what we've actually seen is that there's been a lot of partnership with local operators, right? So yes, they can't come in, but there are fantastic operating teams, platforms that can partner and de-risk or eliminate some of the foreign investment concern, at least from our perspective.
How about you,
Yeah,
Andy?
I think Niraan's right. The smart GPs are partnering with folks on the ground. We have partnerships with, for example, Walker Pincus. We have seen too many cases of foreign investors flying into Vietnam without people on the ground, and they make investments and it ends up in tears. I can name them all day long for you, and I can tell you exactly why, what's screwed up. The reality is, if one of us here have rejected the deal, or all of us have rejected the deal, and the folks sitting outside don't even know that. They make the investment, they don't even know why we rejected the deal, and in reality, and what happens is it falls apart. There is a reason why local investors don't participate in these deals. And rest assured, we have access to all the deals on the ground. And the fact that it's gone to an investment banker and it's been shopped offshore and we're not participating in it, that should tell you something.
Yes. All right. So that is a wrap for this 40 minutes plus sessions. Thank you a lot, Andy, Chris, and Niraan for participating and sharing your very educational and insightful stories. Well, thanks a lot for your time again.
Thank you.
Bye-bye.